Welcome to RenMac Off Script, where we discuss markets, economics, policy, history, and life. It is the 7th of June, 2024. I'm Jeff DeGraff.
And I'm Steve Pavlik.
And I do my best Neil impersonation. I'm Neil Dutta, but he's off on vacation. He's hopefully calling in to give us his take on the payroll data. Oh, I think he has actually jumped on. So Neil, latest on payrolls. What are you thinking?
So the jobs number today, in my view, it's kind of a best of both worlds situation. So first, the establishment survey continues to show very strong employment growth. We're generating about 250,000 jobs a month on average over the last 3 months. The unemployment rate, nonetheless, still rose to 4%. So remember, in economics, we tend to measure the same concept in different ways, and employment is no different than that. So the establishment survey of employment was strong. The household survey of employment, not so strong. But the unemployment rate is the bigger story with respect to the household survey, and it rose to 4% despite very robust jobs growth. So I think what that means is really, when we talk about the scenarios that we laid out earlier in the week, sort of growth is steady and inflation slowing, or growth is slowing and inflation is slowing. In both of those scenarios, the Fed is cutting. So right now, the jobs number today is sort of consistent with that first scenario. I think when you think about the labor market, you take a step back and look at what's really happening. We're somewhere between stabilization and continued benign cooling. So that's kind of where I'm at. We'll see the inflation data in the next week. Sort of will give us a good sense of how things are. I do continue to think that inflation is slowing, and I wouldn't be surprised if we get 0.2 on core PC inflation, 0.1 on core PC inflation over the next, at some point over the next couple of months. So in that scenario, I think it's sort of pickup in yields that we're seeing on the back of this number. To me, that may be an opportunity to get long again, because I do think the inflation data are going to kind of pick up the baton at this point. And if those are softer, then it suggests, sort of back on track with the inflation data, and the fixed income market should like that. I will note that we have seen sort of cuts across a number of sort of G10 economies in the last couple of days. That's been the big news this week. I don't think the U.S. is that far behind. So with that, I'll talk to you guys on Monday with more.
All right. Have a great vacation. Thank you, Neil.
All right. Thank you.
All right. So with that, Steve, you were up in Boston this last week. And it was one of the best parts about going on the road, obviously going out and seeing people, clients and longtime friends, is, sometimes we're in our bubble of what we think is important when we're doing research and looking around. And but it's always good to talk to people and hear what they're thinking about and how they're thinking about the world, particularly in different regions of this great country and, frankly, world as we travel about. But up in Boston, I know not too far away from certainly Connecticut, a little further from D.C., I'm sure there's a lot of talk about the election and the trial, conviction, et cetera. What was kind of a surprise for you in terms of what people were interested in, and maybe give us your thoughts now that we've had about a week to marinate on this this Trump trial, what's going on and what the backlash is.
Well, sure. It was an earlier in the week trip, and I just mentioned that is because I believe last week at this time we were still reacting to the conviction the day before. I think at the time, the verdict was in from the jury. I'm sorry, the verdict was in, but the jury was still out, in the sense that we didn't know what the political impact was. And here we are a week later, and there hasn't been much movement in the polls, sort of suggested that might be the case. Now, intuitively, that probably makes sense, because again, most people have their impressions already made. So would you expect these few persuadable voters to potentially move the needle much? Not really. You have seen a small tick up for Biden, I believe, in most of these polls by 1 or 2. Trump supporters remain relatively stable. I think the biggest story in terms of the impact, from my opinion, at least in the near term, has been the fundraising on the Trump side. Campaign announced $300 million total, and that's include both direct to the campaign as well as the super PACs for the end of May. Most of that coming those last few days into the surge, which doesn't capture some of the June numbers into the end of last weekend. But really, what jumped out at me was 25% of the 2 million people who donated were first-time contributors. And that's significant in terms of trying to figure out, were they people that are low propensity voters that are now more likely to come out, or were they some of these persuadable voters? Maybe that the message of persecution rather than prosecution seems to be resonating. We'll see. Again, I think the more potentially influential date is going to be June 27th, when we have that debate scheduled between Biden and Trump, and a disastrous performance by either side could change the trajectory. So that was something that was obviously a hot topic when I was there. I was interested to hear a lot of concerns about, was there any desire to address the debt? The answer is no, and I think that was depressing. Speculation as to whether the bond markets could intervene in terms of the bond vigilantes pushing back some of these proposals, maybe around this tax bill that's going to be a big driver for next year. Skepticism on that, just because not really sure where else anybody's going to go from a geopolitical perspective. Also, some questions about the transition, more like on the election results. Are we going to know the next day? The answer is probably no. And you have many states that have these automatic recount triggers. So what does that sort of period of uncertainty look like? Does that increase volatility? Does that create an opening for U.S. adversaries, Russia, China, Iran, take your pick, to sort of take advantage of the situation? So that was sort of, I think, the things that jumped out at me, that, maybe not focus as much on that transition. And then just sort of, the betting markets. We saw Trump 16 points ahead in the Real Clear Politics average of betting markets prior to the conviction. Lead got down, I believe, as low as 9%. It's been ticking up as of this morning, Friday, June 7th. It's now above 12. So that is one barometer in terms of how people are assessing the impact, going back to maybe reverting to the mean there. So something to consider. One thing I did point out, though, is we talk about, Trump's gains with the Sun Belt, that being Georgia, Arizona, and Nevada. That still leaves him short at 268. So Biden really focused on the Rust Belt, Michigan, Wisconsin, and Pennsylvania. And one thing that shouldn't be discounted there that didn't, I don't know that all the clients appreciated until we brought it up, is the fact that you have Democratic governors in all three of those states. And that's significant because it is the states that administer the election. And you'd rather have your own referees officiating the game, I think, in any sport, particularly in politics.
Yeah, I'm sure. So when we look at that, because I know you've been talking about the swing states being so important, have we seen polls since the conviction in those battleground states that are so critical, and what do they say?
There's a Fox News poll out today. Now, I know people hear Fox News and they immediately dismiss it. It's actually outsourced, and according to 538, even has a Democratic lean. So Trump's still polling largely where he was. The challenge is going to be the duration of the polls, where more of the respondents sort of immediately after. We're already starting to see some of these daily polls like Morning Consult shift in terms of more of an immediate bounce for Biden, now sort of again reverting back to the mean. Waiting to see what the Bloomberg and New York Times, Siena polls. Those have been good sort of monthly, sometimes quarterly trackers. But again, it's going to be heavily influenced on which voters were called on the day and the day after the news broke, maybe a week or two later, where it's having less of an impact. So I would just caution people. Again, I think polls after the debate in July will better sense at this point. This will be more baked in. But at least right now, the movement is minimal.
Yeah. I mean, it's third and long, and dial up the old screenplay and right over the top. First down. It's unbelievable.
Well, the money, though, I mean, just to go back on that, I mean, I know there are a lot of questions about how useful that is now. I mean, before, where there's more grassroots, that tends to suggest more support. People are giving, smaller donations. They're energized. You can also come back to them versus the high dollar events. Biden did have a significant lead over Trump, not surprisingly, and the fundraising advantage, but Trump is starting to close that gap. I'm skeptical that advertising is going to have much of an impact, given how well defined both Trump and Biden are in the minds of voters. I think the bigger potential to move the needle there is on the ground game. And at this point, the Biden campaign has an advantage in that they have just more offices and more staff on the ground. So that's something to consider moving forward. But obviously, Trump closing that gap, bodes well for his campaign.
Yeah, no doubt about it. Well, in terms of how we're looking at the world, I mean, clearly yields are important. We did get right down to that support level. In fact, you can make the case that we broke through that support level at 430 on the 10-year yield. This payroll number obviously putting a wrench into that as we rally back through 440 on the upside here before the equity markets open. But it does help set the stage. There's no change in the trend. We were not oversold, so I think that's something to keep in mind on 10-year yields. But that does reset the parameters, I should say. 465 is now resistance on the upside, with the next support being 420 on the downside, but still the sequence of lower lows and lower highs. And so that's going to be really important for that 465 level. This is what we think is a trend transition. The 50-day still above the 200-day moving average on yields. And so, we can't call this a bond bull market yet or a bear market in yields, but we are putting in this sequence of lower lows and lower highs in yields, which is important. And we've seen some cracks globally, Canada being the one that really jumps out here recently with their rate cuts, and then the contraction that we've seen in 10-year yields. Steve, I can't believe you forgot about the adversary of Canada to the north in terms of influencing our election, but maybe you'll see the light here by the time the election comes around. What the real the real challenge for, I think, for sectors is what we're seeing out of utilities, right? And so utilities have had a nice run. They are not historically a good bond market proxy. I know it feels like they should be, but keep in mind when yields are coming down, instead of saying, let me buy utilities because I'm going to get appreciation because of that discounting factor of the dividend yield, that's a little too clinical. What tends to happen historically is as yields come down, people shift away from defense into cyclicality because why mess around with a 10% return, through the dividend and price appreciation of a utility when I can get a 25% return out of a deeply oversold cyclical. And so you don't tend to see outperformance of utilities when yields are coming down. And that's, I think, a really important distinction that a lot of people miss in this business, professional and amateurs alike. So just be careful there. But what we'd say with utilities, because we did get a relative strength trend change in the utility market for the S&P 500, not for the Russell 1. But that improvement in utilities could be pretty easily attributable to the lower anti-momentum basket that we talk about. Remember that in April, momentum had reached an extreme. So momentum names were outperforming the lowest momentum names by a factor that, you've only seen about 6 or 7% of the time historically over the last 30, 40 years. And when we get those momentum extremes, we want to be really careful about buying into momentum. And so a lot of times you'll see that reversion trade where the poor momentum names do well, the strong momentum names do poorly. And we have seen that. We've gone from that 94th percentile down now to the 18th percentile in terms of that spread between the two. And utilities were in that bottom basket. So utilities, you could say, well, they're just the anti-momentum trade and they're working. And that's a fair statement and a true statement. And I think there is something to that. The one interesting part of the utility trade, though, is that we're seeing it globally. In fact, when we go through China and look at the various industry groups and sectors, and we go through the individual names, some of the best charts in China are in fact utility names. And, recall, we think that China's making a big turn in terms of bear market to bull market. And that's just not the type of behavior you'd expect to see, which is this increasing leadership out of utilities. So I'm actually more encouraged by utilities here, not because of bonds, not because of the Q5 anti-momentum trade, but because of what we're seeing globally and the pickup there, and the kind of curveball that might be presenting in terms of the narrative as to what's actually happening. So keep an eye on that as we go. Steve, what's happening in Washington this next week?
Well, one hearing I would watch next week is this Senate Budget Committee hearing looking to tax Wall Street. I think the title's something about the fair share. And that's interesting because that's Sheldon Whitehouse. That committee does not have jurisdiction. I think it's an attempt to try to influence next year's tax debate. So, take what you hear with a grain of salt, but we're already seeing both sides sort of position themselves ahead of that. That's really going to be the dominant issue next year. I would keep an eye on, just outside of Washington, the European Union's going to have an election. It looks like the right's going to make some gains there. And keep in mind, it's all about expectations. We had elections last week with India. Prime Minister Modi was reelected, but his ruling BJP party won by a much smaller majority. He's no longer going to have to be able to rely solely on them. I think that's why you saw just that potential risk of uncertainty, having to rule with a coalition, some of the negative impact there with respect to its currency. And then in Mexico, the AMLO's successor, Claudia Sheinbaum, the Morena party won with a very much larger majority than expected. So now they don't have to negotiate. Now there's some fears whether or not that's going to call into question some of the independent institutions there, and that's why you saw their currency rally. So I just bring that back to the U.S. Sometimes when you talk about the political implications, people are like, well, how does this really matter for me from a market perspective? And I just think that's a good reminder that, yeah, these elections and whatever the expectations are and people's positions do have real market impacts.
Yeah, no doubt about that. Well, we're going to continue to watch these yields and looking for signs that there's going to be some stability or contraction. And again, as Neil's talking about, if inflation is to come down in the next couple months, certainly there's room in these real yields, which are still pretty fat, for that contraction to express itself through lower nominal yields. So we'll continue to monitor that. Overall, for the S&P, the trends are still positive. The next resistance level really doesn't exist now because we broke through the previous resistance level. 49.54 is now support, but the trends are still in place, and that's good news, not bad news. Seasonality is still with us. And I think seasonality and sentiment are probably drowning each other out here, but the trends still persist and become more dominant in terms of our call, in that we will not fight those trends. We're seeing that contraction in silver, in gold, in copper, in these precious metals. These are consolidations. These are not peaks in our view. These are consolidations. They're likely to burn off some of those excesses that we saw in positioning, but still oversold conditions in those areas are viable in our view. And keep an eye on Bitcoin. Bitcoin quietly, sneakily trying to break out through that 72,800. It might have done it already, but it's right on the edge there, clearly acting better. And again, looks like a big consolidation in this ongoing uptrend. Well, join us again next week. We'll be 1 week older, 1 week wiser. Don't forget to follow us on Twitter. And if you want deeper insights, you can join us at RenMac.com. Until then, I'm Jeff DeGraff.
And I'm Steve Pavlik.
And we'll have Neil Dutta with us next week. Until then, we'll see you.